So I've got three things that I want to cover in today's video. First of all, we're going to take a look at the Mortgage Works Buy-to-Let Barometer, which is a report covering the first quarter of 2024 and how the feelings are within the buy-to-let market amongst landlords. Then I want to share with you a few emails from yesterday, the 16th of May, 2024, which I'm hoping is the start of the good news going forwards in regards to mortgage rates. And then I want to finish off with a very quick look at the latest swap rate chart. So let's get straight on with it. So as you can see on screen here, we've got the buy-to-let barometer from the Mortgage Works. So quarter one 2024, landlord confidence. Compared to a year ago, more landlords are feeling good about the prospects for their own letting business in the next 3 months. The proportion feeling upbeat about the prospects for rental yields has edged down to 38%, while landlords feeling good about capital gains remains unchanged at 21%. Scrolling down, market dynamics. Almost 3 times as many landlords intend to sell in the next 12 months as plan to buy. The incidence of rental increases has risen significantly over the last few years. 78% of landlords putting their rents up in the last 12 months. 44% of leveraged landlords will remortgage or take a product transfer in the next year, with most opting for a fixed rate. And this is something that I'm seeing amongst my professional portfolio landlord clients. Many of them, when they get to the point of remortgage, up until now have kept their rents pretty much the same for a number of years. They're now having to increase that rent in order to just meet mortgage payments. So not only are the increased interest rates that we're seeing a problem for landlords and mortgage holders in general, they're also now becoming a problem for tenants because tenants' rents are rising. Moving down further onto portfolio profile. The typical landlord has 7.2 properties and achieves a gross rental yield of 6.1%. 67% of landlords have at least one buy-to-let mortgage, with those who borrow having an average of 5.2 buy-to-let loans. So that's just a very, very quick summary from the Mortgage Works with their buy-to-let barometer. There will be a link to this report in the video notes, so please do feel free to go and take a look at that in a little bit more depth and maybe explore the graphs and things like that. I just haven't got time to go through that here today. Next up, I want to share with you some good news that we had yesterday. So as you can now see, this is 3 emails that we received from 3 of the top big lenders yesterday. First of all, we've got an email from Barclays saying that they're reducing their rates on a selection of their products on their residential purchase, remortgage, and product transfer ranges. So all at different loan to values, different loan sizes, things like that. Obviously, different criteria for each different lender and different criteria for the products that they're changing, but a vast number of products from Barclays reducing an interest rate. That was then swiftly followed by the HSBC, who made announcements that they were also going to be reducing rates across a vast number of their products. And then lastly, we then got another email in from TSB, who also announced that they're making rate reductions. So yesterday was a fantastic day, all kickstarted by Barclays. Now I'm hoping that this is actually going to be set to continue because the indicators are that the markets are moving in the right direction. We have been talking about this for a little while, and obviously the messages that are coming out from the Bank of England and Andrew Bailey are that things are moving in the right direction, and we're hoping that we're going to be able to start cutting the base rate soon. So things are now starting to pick up, and hopefully this is set to be the start of the way things are going to be going for the second half of 2024, which is going to be great news if you're looking to get a mortgage. So why did this happen? So let's take a look at the swap rate chart. So a very quick summary for those of you that are new to the channel. This is the chart that's available from Chatham Direct. You do have to subscribe to actually get access to these charts in this amount of detail. You can choose which period of rates you want to look at. I tend to focus on the 2-year, the 3-year, and the 5-year because those are typically the most popular mortgage products that people take, and it's the swap rates that then dictate the mortgage pricing. The chart runs from November 2022 up to May 2024, so right up to present day, and you can see quite clearly on the graph where rates have started, where they've gone up, gone down, fluctuations over that period of time. And then if we scroll down, you can see the different date ranges that we're talking about and then what the swap rates were on those particular days. So this is the close of business yesterday, the 16th of May. As you can see, 2-year rate 4.432, 3-year rate 4.18, and 5-year rate 3.893. So these rates are on the way down, and it's for that reason that lenders are now able to start lending money at slightly lower rates. Now, like I say, We don't know if these rate reductions are going to continue. Swap rates can fluctuate greatly on a daily basis, dependent upon market conditions and information that's coming in from various aspects of the economy, as well as worldwide events. All of these things can have an impact on swap rates, which in turn has an impact on the lender rates that are available to you and me as consumers. But it does look like things are now moving in the right direction. So fingers crossed it does continue. No guarantees. Let's hope it does keep going in this direction. And so if you're out there looking for a mortgage right now, get in touch with a mortgage broker to discuss your options and to consider your plans going forwards. If you're due to remortgage within the next 6 months, I strongly suggest that you do start to do your research right now and not to put it off any longer. Hopefully you found that useful. As always, thank you very much for your interest in the channel. I really do appreciate it. Please do give this video a thumbs up. Please do share it. And if you haven't already, please do consider subscribing to the channel. We are also on lots of other social media, so TikTok, Instagram, Facebook. So if you go take a look at our profile, there will be a Beacons link. And if you want to go and look at our other channels where we do produce different content, then please feel free to do so. But thanks for watching and take care.